Hello, good morning, everyone. Welcome to our live morning market update and trade summary and trading room open, I guess. In today's video, we're going to talk about the Bank of England decision to hike interest rates for the first time in over a decade, and we're going to talk more importantly about Jerome Powell. You may just have a new Fed chair. There's about a 99.9% chance Jerome Powell, aka Jay Powell, will be your new Fed chair, and I'll tell you everything you need to know about him, his stance on the Dodd-Frank, on Fannie and Freddie Mac, on shrinking the Fed's portfolio, interest rates, and a number of other things. You're going to walk away knowing Jay so well that you're going to invite him over for a Christmas dinner this year, I promise you. All right, let's get started. First and foremost, this morning, Bank of England announces a 25 basis point hike to half a percentage point total on the monetary policy report and their summary. They also highlighted it was a dovish hike. All you need to know is it was a hike, but it wasn't a very confident hike. And a lot of market traders, a lot of economists and analysts believe that it was a policy mistake. It came too soon and too quickly, and it hit the market. And that's why the UK pound was actually lower. And it traded lower, and it's starting to rebound a little bit now off the lows. I got a few trades in there and took advantage of some of the opportunities. Currently along the S&Ps overnight. I'll talk about that in the trading room as to why I decided to do that. And that's all I got for you. Let's get started with the rest of the stuff. Overnight or yesterday, we had a massive miss in Tesla, minus 5% down after hours. Look at Tesla today. It's going to be an interesting stock on an update of reduction of their Model 3 production. So they're pretty much pushing out their production date, and they're taking off some capacity from the Model S to reallocate to Model 3. Tesla's getting beat up, and it did not have a good earnings report at all. It deserves to get beat up. Today, it's going to get punched in the face more. Be careful. In Asia, Japan's up 0.5%. Hong Kong's down 0.3%. China's down 0.4%. India's down 0.1%. In Europe at midday, London's up 0.3%, Paris is down 0.1%, Frankfurt's down 0.2%. So you're seeing a slight bearish skew here in the markets, but not a big one. More or less flat. Futures here in the United States, Dow Jones is now flat. S&P, S&P's flat. Nasdaq's flat. Crude oil is up 0.1% to 54.34, and gold's down 0.1% to 1276.70. All right, this morning we had the initial jobless claims. Other than the BOE report, we had the initial jobless claims. They came out at 229,000 versus 235 expected versus 234 prior. So you're seeing a decrease in initial jobless claims, and that's a really, really good number. It's a very strong, solid number from an economic standpoint. There's less people filing for joblessness, which is awesome. Now, the last piece of the labor market puzzle this week, last piece of the labor market puzzle, that's almost an alliteration, almost, is tomorrow morning at 8:30 in the morning. We're going to get a chance to see the private payrolls number. Non-farm payrolls are going to be huge. That has a potential to move markets a little bit, especially because the second last report the Fed's going to see before their meeting in December. All right. For the rest of the day at 9:45, you got your Bloomberg Consumer Comfort Index coming out. Your natural gas inventory at 10:30. Natty Gas is a wild contract to trade through that. Lots of volatility and a lot of opportunity. We traded in our room. All right, and that's pretty much all you got. Let's talk about Jay Powell. Okay, he's going to be the first ever investment banker to actually head up the Federal Reserve. Donald Trump is scheduled to announce his decision at 3 p.m. Eastern today, this afternoon, 1500 o'clock. He's expected to come on the mic and tell us who it is, why he nominated him, and to make it official. Wall Street Journal last night leaked that Jay Powell's got the tap on the shoulder. He's going to be their front man and run the Fed. Here's who Jay Powell is, what he believes in. All right. After being an investment banker, he's obviously pro-market. He knows not the economy, but he knows the markets really well. He knows how these things function. He knows the inner workings, and that's different than what Janet knows. She's a career economist. Now, here's the other part. Jay Powell will be the first Fed chair to not have a PhD in economics in over 40 years since the Fed was started. So think about that. The first non-economics PhD Fed chair. I give that a thumbs up. I don't know about you guys, but economics has changed. Ben Bernanke single-handedly devalued the worth of an economics degree to zero because he changed the name of the game when you're able to flood a balance sheet with $4 trillion, just dump it into the economy for stimulus. That's going to change things. Traditional economics metrics start to fall apart with that kind of, once I just got a squawky threw me off, with that kind of involvement from a private institution. The Fed's not even public. The Fed's a private entity. Anywho, let me cut that rant short there because we got a lot to talk about. All right, the market reacted by selling off last night in the evening, and gold popped a little bit, but it since has recovered. Equities are back up to pretty much where they closed yesterday. Gold's back down to where they were yesterday before that announcement, right before Wall Street Journal leaked it. So here's why Jay Powell is actually not that bad of a pick for the Fed chair role in comparison to what Janet Yellen did. First and foremost, Jerome Powell, Jay, let's call him Jay, backs a gradual increase in rate hikes. He agrees with Janet Yellen. There has to be a gradual increase. All right, he expects inflation to increase to 2%. And obviously, so did Janet Yellen. She just couldn't make it happen. They're flooding the market with this free money, and that free money is not circulating into the bottom level, the end user. Therefore, inflation's kept at bay. Inflation hasn't increased, and that worries the Fed. He thinks he's going to get it to the 2% target. Yeah, good luck there, Jay. It might actually happen, it might not, but I mean, you can't just say, I think we're going to do it. Like, anywho, I'll let that go. He also thinks economic growth is going to remain steady and expects unemployment to fall further. That's very much in line with Janet Yellen's train of thought. They're on the same wavelength. So it's not a massive disruption for the market. If John Taylor was a Fed chair, that would disrupt the market quite a bit. You could expect a lot of volatility in the equities following a decision like that, because we'll talk about why in a moment. All right. On shrinking the Fed's portfolio or balance sheet, this is what he said, Jay Powell. He voted in September to start the big unwind of the $4.5 trillion balance sheet. Remember, he's a Fed governor. He's a voter. He voted towards the unwind of the balance sheet. Okay. He also said we could resort to new funds or rounds of stimulus in the future if economy deteriorates, but only under extraordinary circumstances. So he's also said if the market turns sour and drops, we're here to backstop it and flood some more money back in the economy and put that back on the balance sheet. Supports the unwind, but he also supports going in and re-stimulating once again if it's necessary under extraordinary circumstances. That's not a quantifiable term. All right. I always like to say that too. I'll see you on Sunday at 8 p.m. for a date, unless there's extraordinary circumstances. Leave your options wide open. Monetary policy rules. Here's what he believes in monetary policy. He warned against taking a mathematical approach to interest rate policy. John Taylor says we should use my Taylor rule, very biased, hashtag biased. And he said, let's use the Taylor rule and automatically increase or decrease the interest rates. Well, that's great, but what Jay Powell says is, I am unable to think of any critical, complex human activity that could be safely reduced to a simple summary equation. I agree with the guy. All right. I question the simplest math equations. When I go out for drinks and I get the final tab, I review it 10 times because math ain't all that common. It's kind of like common sense. Math skills ain't all that common. All right. So I agree with them. Taking a mathematical approach doesn't seem to be the best answer. There still needs to be a little bit of an art to it. There has to be a feel to it and a discretion and override capability. That's his words of monetary policy, which puts him at odds with the Republican Party because Republicans want more transparency. They want a more gradual, straightforward approach that is anti-Janet Yellen, and he's more like Janet Yellen. Trump is a Republican, so you could see how that's going to rub some of the people the wrong way. And considering we have some tax stuff going on as well today, that might actually push some of the Republicans to get angered. So we'll look at that. On Dodd-Frank, I got two more things to cover and we're done. On Dodd-Frank, he says his willingness to ease some burdens imposed on financial institutions. He's willing to ease some of the burdens imposed on financial institutions from the 2010 Dodd-Frank Act. So he's saying, I'm willing to make the conditions a little bit more accommodative to help you out. This is huge for trading. I'll tell you why in a moment. All right, he wants to soften the Volcker rule. And what that says is it prevents banks from engaging in market activity with their own firm capital. Now, when a bank has its own money, if it holds and retains profit on the book, it is not allowed in this present day to go in and trade in the market to take risk or speculative positions. And a lot of people don't know that. They say, oh, the big banks are taking my stuff. The big banks don't trade against you. They trade for their clients and for their portfolios. Yeah, they trade against you, but they trade with the purpose to make their clients some kind of alpha, to return some kind of value to them and not to screw you out of your stop loss. All right. However, if Jay Powell makes a move to reduce that Dodd-Frank and to allow banks to speculate, banks will get back into proprietary trading. It's going to be massive. It'll infuse a lot of volatility into the equity markets. It'll be like trading in 09, 010. If you guys remember that, even before that, before the market crash, you're going to have a lot of liquidity. And this might scare the pants off of you, but there were days where the market's up 2%, down 1.5%. I'm talking about 60, 70 handles on the S&P volatility on a daily basis. All right, imagine that. Fingers crossed. However, I don't think it's the best thing for the economy. Selfishly, it's a good thing for me. I'm at a crossroads here. All right, he also said he's going to ease some of the annual stress tests imposed on banks, so he supports a little bit of a reduction of Dodd-Frank criteria, but not a full repeal. And last but not least, on his views and opinions here on Fannie and Freddie Mac, he called on Congress to overhaul the housing system. He said that moving Fannie and Freddie out of the government's grasp is probably a good idea. He said making it more private will bring in private capital, and if there's time for another bailout, it won't be taxpayer funded. I 100,000 million% agree with that. There's no reason you listening to this broadcast, if you're in the United States, should be bailing out a big corporation that decided themselves to take the stupid risk without asking you. All right? It's one thing if they came up to you and said, hey, Steve, I hope there's a Steve out there watching. Hey, Steve, what do you think about bailing out this banks? And Steve says, well, you know what? What are the risks? And then you tell Steve the risk, and Steve checks, yes, I do. It signs off on it. All right, Steve, you deserve to lose your money if you do that, because you have the opportunity to make money. But the taxpayer had no opportunity to make nothing, and they were at fault for that whole thing. They bailed out this entire financial crisis in 2009. Mind-blowing to me. Anywho, I got into it there because I didn't believe in it. You know what? If you're a bank and you took a dumb risk, you deserve to die. No offense to anyone out there, and I know somebody's going to get rubbed the wrong way here that works in banking. I used to work in banking too. If you go out there and you take stupid risk, the same thing should happen to you that happens to me when I have a bad day trading. I don't end up with a zero. I don't end up with a profit 3 quarters later. I end up with a loss on my book, and I look silly, and I got to carry that on my back. Then they'll start to act different. Anywho, Jay Powell does support the same mindset as me, and a little bit different from Janet Yellen, and a little bit more in line with the Republican way of thinking. Anywho, I like this guy. He sounds like a decent guy. I'm going to meet him. I'm going to bring Jay Powell into our trading room, guys. That's all I got for you this morning. Everything you need to know, Jay Powell and more, his stances on policy. I hope this was helpful. If it is, please click the like button, comment, subscribe, share this with your friends, family, and loved ones. And this is information they need to hear. The Federal Reserve is one institution that's privatized, that has incredible power, and that's doing things underneath your nose that would make you angry. So you need to know who runs it. All right? You guys take care. Have yourselves a great day. I hope you enjoyed that. Things to watch there. Tesla. We're having Facebook earnings already came out yesterday after the bell. We're having Apple earnings today after the bell. Massive mover for NASDAQ. And we have the BOE that talked about inflation and raised rates by a 1/4 point. Follow the pound as well. All right, guys, take care. Have a good trading day. Manage your risk. Give our trading room a shot. Come out, try it out. 14-day money back guarantee. I guarantee you'll like it, and you're going to learn some things. And we have a proprietary grade training course available for you on how to read order flow that I guarantee you won't find anywhere else, because it works. And if you do find it, just send me a note within 14 days. I'll give you your money back. If you don't want to be here, I don't want the money. It's plain and simple. Take care. Have a great day, guys. I'll see you tomorrow at 9 a.m. Trade well. Tomorrow's Friday. Let's put some money on the book today and pad the week so we can go in tomorrow a little bit easier and a little bit less stressed out. I don't know about you guys. I had a bit of a tough week. The first couple of days are a little rough for me. Rebounded yesterday. But this week, I'm a little bit off. I don't know what it is. Do I look off? See you later, guys. Patent the chair spin in 3, 2, 1. I'll see you guys tomorrow. Everything you need to know about Jay Powell and more.